Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
The fact that India is the Maharaja of tariffs, it's the highest tariffs in the world, charging on American products.
We therefore weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them.
We are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine, and we're going to have a good deal.
Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward.
I'm very hopeful of a very good deal with the United States.
What excitement, what drama, and absolute rocker of a night, if I may say so. The trade deal getting announced. Nifty, historic open, 1,200 points higher. 1,000 points, 26,030. Nifty Bank, 23,050, which is 60,950.
This is positive from a sentiment point of view.
The markets was lacking a catalyst, and this certainly comes as a catalyst.
Well, that is, of course, a sum and summation of everything which has happened, how it started, and how it's come to fruition and a happy kind of sort of ending for now, right? 680 points is a good-looking screen. It's not at the day's highest point, but 25,770 is where we're at. Last hour coming up, this is Closing Bell. We are coming to you from the CNBC-TV18 Moti Roswa studios. We've got Rima in green and Nigel joining in. Guys, hi, afternoon.
Hi, afternoon. So shots are getting covered, and plus it helps that today is also the Nifty weekly expiry. Adani Group stocks are on fire, 10-12% kind of up move. And then you've got a 10-20% kind of gain coming through in the textile, gems and jewelry, the Avanti shrimp-related companies, and the advanced decline ratio. I think since morning you've been saying, look at that advanced decline ratio, 2,500 stocks gaining, 2,200 stocks gaining. It's held up.
Like Prashant said, it was a rocker of a night, and it's a rocking day as well. The bulls will have not seen something like this. Rima in green and a lot of stocks in green. Beautiful looking screen. But I'll tell you what, the rupee is the most heartening aspect, right? Because it's done a swift 92, almost at around 90. Beautiful, right? I mean, the Lanavla to London plan can restart, I think. So the drift from, from London. Nice. Good to see some strength on the rupee. I think that's an important barometer. And I think post-market hours, we have our hands full because there'll be a lot of short covering that we'll have to analyze. Let's see whether or not we get a large buy number coming from the FIs. But it's a very, very good trading session. And it's been so long since we said that.
And making it to a Tanishq is still tough, huh? Because gold and silver prices have recovered very sharply.
I spoke to two investors, not a lot, two, but fairly decent foreign investors in the last 2-3 hours or so. And the general feedback, I'm just summarizing that, well, this will run maybe for the next couple of days or so, but eventually we'll have to see what is the actual earnings, will it lead to, and the answer to that is a little skeptical. Will this lead to a really big earnings bump or anything of that sort? We actually had Neelkan Mishra on the air at mid-afternoon, 12:30, 12:45 or so, and he also was. He kind of said he rated credit transmission into the economy much higher than, and his point was, well, it didn't hurt, so why should it help?
Correct.
In that sense. But I think sentiment is underrated, as Rhythm said, and sentiment makes a lot of difference in that sense. So we'll pick it up from there. Nigel, your
NMDC's numbers. Yeah, I think it's more or less in line, a little bit softer on the margin front, but I think that's par for the course. Last quarter, actually, the realizations were under pressure. But what could have helped that top line is that the volumes are much better on a sequential basis as well as on a year-on-year basis. So that explains why NMDC more or less flattish on expected lines, you'll have to say. The net profit number is appearing a little bit higher. That's because the top line was higher, but the margins actually are more or less in line, and the absolute EBITDA number is in line. So I think, the bulls will take that. But, Prashant, the important point the Rhythm made yesterday, both for life as well as for markets, sentiment is very important. And the way he put it, right, you wake up some morning, you're feeling very, very good, you go out there, you shop, but if you're not feeling good, you don't do much about it.
As the Gen Z, what's the Gen Y? Gen Z. Well, Gen Z put it, vibes.
Good vibes.
Good vibes.
Good vibes only.
Sentiment is equal to vibes. Good vibes. I think good vibes are important in that sense. Well, last hour coming up, right? Mitesh is with us with what he'd want you to do in terms of positioning, because, I mean, it's trade management, risk management, and position sizing after a run-up like this, which is going to be important. Mitesh, good afternoon. Good to have you here. So what would you advise viewers do?
Look, in terms of the index, I would still want the chart to settle down a bit. We had a big gap up and then tapering off. As I said, I think a big gap up should not be chased. That was the only understanding. And also is the fact that the market kind of just went near the earlier highs of 26,300 plus levels and then declined from there. So for the time being, I think I'll wait it out on the index. Though I think this gap up, kind of negates the bearish movement which is happening till yesterday afternoon. So I think that has been taken out, but we haven't had signals of a positive movement starting. So just hang on. What could be interesting to watch is the Bank Nifty. The Bank Nifty has never had a closing above 60,200 levels, and we are close to that. So, wait and watch kind of a mood going on. On the stock side, Coforge is something, which has come on my buying list today. That's a stock which has done well, after corrections trying to reverse. So recommend a buy here. The stop just below levels of 1689 and a target for around 1775 can that. Bajaj Finserv is another one which is a buy with the stop below 1994 and a target around 2065 is what I would look for.
Got that. Thank you very much for that. Mitesh, we'll come back to you. For now, it's over to Ritu. She's compiled what brokerages have said on the India-US deal and the way forward. Ritu.
Well, no two ways about this. The street sees this India-US trade deal as a clear growth positive. So Barclays, for instance, calculates that the India trade-weighted tariff on exports is going to fall to around 16.3% from 35.7%, which is the effective tariff currently. And that's a meaningful reduction in the trade cost, which puts India firmly back in the trade competitiveness play. But Barclays also warns that some of the key conditions are still unresolved. So India's stance on Russian oil purchases, the commitment to buy large volumes of US goods, these are not mentioned by Prime Minister Modi in his tweet anywhere. And these are the factors that are going to influence how the deal plays out in practice. So fine print is something we still have to wait for. But if history is any guide, we've seen what happened with South Korea and Canada, where initial tariffs underwent big changes, and you can't really rule that out with US President Trump. But Barclays says markets have probably priced in the best possible outcome as of now. They're also not rushing to change the FY 26-27 GDP growth forecast, which is still retained at 6.5%. From JP Morgan's standpoint, export-oriented sectors like your textiles, gems and jewelry, leather, chemicals, etc., they stand to benefit the most, with potential for increased foreign investment there, a stronger rupee and clearer earnings outlook. They also reaffirmed their Nifty year-end target of 30,000. Bank of America takes it even more optimistic view. They estimate that the effective tariff can drop all the way to 12 to 13%, and that gives India one of the most competitive export tariff rate in the region. They also see this as providing significant relief, especially for labor-intensive segments, and point to an upside risk to India's FY27 growth of around 6.8%.
Well, absolutely, and this has done its job. Ritu, by the way, the RBI meeting later this week, right? It's on
Friday. Friday 10 a.m. is when we'll hear. So far, the consensus is building towards a hold.
Yeah, but big OMOs?
Big OMOs to support the yields. Despite all that RBI has done, record high OMOs, they've not really come down from 6.7% kind of a level.
Yeah. So that's the other trigger for financials once it happens. So we'll have to see if the OMOs do come through. But as Ritu said, in terms of rates themselves, it's likely to be hold. Well, so much has happened, right? There's the budget, and then, of course, after that, there's the trade deal. So compared to where we were last week, just how you'd go into the policy, perhaps a little bit different in that sense. Gurmeet Chadha is with us with what he's making of things. Gurmeet, good afternoon. Good to have you here. So what's the, we spoke after the budget and now, of course, this is, of course, a much more pleasant thing to discuss. So this 3-4% across the board indices move has happened now, right? So what's the best way to position yourself for making money from here, Gurmeet? Do you think small and mid caps, that part does well? So maybe get some exposure through a ETF, actionable stuff that one can do here now.
So hi, Prashant. I think this is how quickly things change, in markets, and we keep discussing that 2 or 3 days in a year actually make a big difference in your overall returns, and that is why it is important to stay invested at least as far as your core allocation goes. I think a lot of stocks will see a bit of a re-rating, especially sectors which have been impacted due to tariffs and US exposure. We're already seeing upper circuits in a lot of textile stocks, whether it is Gokuldas or KPR, etc. Then I also think there will be some, once there's more clarity on Section 232, etc., I think even in some auto ancillaries, there'll be very good movement because if you see from the top, they've been quite suppressed and auto numbers have been exceeding, doing very well month on month. So, players like Sandhar Technology or Uno Minda, Sona BMW, Mothersons of the world, I think there is some bit of action which should play out there. I also think with some of the cloud over IT companies, mid-cap IT services company, in terms of deal wins, etc. Although there's already a bit of some companies have done well. I think that would play out. I think something like a KPIT, which is really corrected, and it's more like an auto tech. So actually, I think there's a large universe which is down 30-40%, despite Nifty being 27-2800, and there can be reasonable upside there. So you've got to increase a little bit equity allocation. 2-3% doesn't make a difference. I also think the growth numbers, GDP estimates will get revised for India with a lot of foreign brokerages.
IT, though, is having a slow day, Gurmeet. Tech Mahindra has dipped into the red. KPIT Tech, a stock that you were talking about, is flat in trade. Wipro, LTI Mindtree, Tata Elxsi, HCL Tech, all just up a meager 1%. And the other pocket, which is slow today, are some of these FMCG-related names. So Tata, pull up a Dabur, pull up a Colgate, and you would see flattish moves coming through. So Gurmeet, you said it's time to increase equity allocation. We know about the stocks that you like, and I presume you're topping up those. But any fresh ideas post the earnings season?
So as I said, we are looking at some of the auto ancillaries and related plays. We recently added Raj Ratan Global Wires, which basically makes bead wires for tires. They had an issue in terms of their Thailand unit not doing well because of dumping from China. I think that's behind, and they've set up a new plant in Chennai, which will meaningfully start contributing both to volumes and a bit of an operating leverage playing out. The stock has seen a very healthy correction of what it was 2-3 years back. So we've added some chemical names like JG Chemical, which is again into zinc dioxide, where again the end use is more tire, which is again linked to auto. So that's something we've added. We've added a little bit to some of the large cap names, which is Bharti and M&M, etc., wherever the movement is more modest. And we are looking at some more weightages in pharma and defense names because we are looking at more 2-3 years. We are not really looking at on a daily movement. I think there is a lot of re-rating left. And then you have a Biosecure Act, which at some point of time will see the light at the end of the day. So as I said, you have a lot of options now. And I think if you should probably start front loading it a little bit. And then any interim volatility in between can be used to, so maybe 30% now and the balance over maybe next few weeks.
Okay, all right. Gurmeet, a quick word on Gokuldas. You had briefly mentioned it. I think you'll had that stock. I'm not sure whether you'll still have it. What are you doing with that? And you're looking to add now?
We wanted to, Nigel. Unfortunately, we didn't get anything since morning. It's been on the circuit. But we took the pain. We actually entered 2-3 years back. So from our price, obviously, it's done 2x. But obviously, it's went up to 12-1300 and is down. So I think we'll continue to hold. I think because there is a lot of margin impact a lot of these guys have taken. And I think with the EU FTA also, you'll have more, although they said they are full till early part of 2027. But this is very timely. I think the next season will not get spoiled. A lot of unlisted guys, Nigel, are our clients in Narayana, in Gandhinagar, a lot of, the local wholesale garment market here. There was a lot of pain there. And I'm more happy because, this is a very labor intensive sector, a lot of women labor involved here. So I'm most happy for textile. But this will be a tactical play. You can't really buy them and hold. At some point of time, you'll have to take a call. But I think I see some more upside coming over the next few days here.
No, I think that's an important point, right? There's the market, of course, but there's also livelihoods, etc., which were impacted, disrupted, and so some relief there, and should happen actually fairly quickly, because that was the other question: how quickly will these export orders start to come through towards Indian companies, MSMEs, etc., with these tariffs, which are now very competitive. So the feedback is, well, it should happen pretty quickly. I asked that question to Mr. Vadhavan, the former Commerce Secretary, and that was his response. Some numbers from Adani Enterprises, revenues are up 9%. I think you've got the profit number coming through as well. But one name, market's going one way, one stock is going the other, which is PB Fintech, right? And we reported yesterday during market hours that there's during the board meeting for results, and by the way, the results are strong. They're going to consider a fundraise for a potential acquisition, and it did happen. The company confirmed exactly that. So that news break was confirmed. We have more details now in terms of the quantum of the fundraise and some more indication of what they are planning to acquire. Yash is here with details. Yash, take it away.
Just yesterday, we had reported that the management is expected to approve a large fundraise for supporting a major acquisition which the company intends to make. In continuation of that, what sources are telling us is that the size of the fundraise itself could be upwards of about 3,000 crore rupees. PB Fintech at this point of time has about 5,500 crore cash on its books, and according to our sources, the size of the acquisition could be upwards of about $1 billion. So it's going to be a large fundraise with a large cash already present on the books for the purpose of supporting an acquisition which could be upwards of about $1 billion. As far as the acquisition and the geography itself is concerned, we've been told that the company is evaluating a couple of target companies in UK as well as Europe. As far as the board meeting is concerned, the next one would be on February 5th, where the size of this fundraise would be finalized and announced to the exchanges. But importantly, what I've been told is that this particular acquisition would be in the space of insurance product distribution and aggregation, similar to what the company does in India. Of course, this would be in the international market. What I've been told, as I said, the geography could be UK or Europe.
Yeah, Yash, thanks very much for that. Gurmeet, any thoughts on this one? Market's not taking a very charitable view. Numbers were strong, but 2 days, 10-11% correction.
Prashant, it happened earlier also when they announced something to do with health, and then there was a reaction. So I think we'll have to wait what the acquisition is. Operationally, numbers look good. Also, the last quarter is the best quarter for most insurance companies. This anyways is an aggregator. And there is some cloud over the commission as well. So a lot of headwinds also in terms of how much our IRDA will reduce commission, both on endowment plans, par and non-par. So you'll have to see a bit of that. So I would wait for in terms of what are they willing to acquire. If it's in terms of acquiring a physical distribution, large physical distribution, or maybe getting into insurance themselves, then we'll have to see. So I think and they already have 2,100 crores cash in the books, if I'm not wrong. So if you're raising another 3, seems to be a pretty large acquisition. So better to wait it out because if the capital asset allocation is not to the liking of the market, you may see some more reaction.
Yeah, no, absolutely. That's the other one, right? Gurmeet, the Adani pack is all, of course, sharply higher. Any thoughts? Ports, Enterprises, Power Green?
So we really don't own any Adani stock, Prashant. Although I like Adani Ports, I think it's something which is their cash cows. Plus, I think it's got to do with the US deal happening. There have been some uncertainty in terms of SEC serving notices over there. So maybe the market feels that the worst in terms of the issues they are having with SEC could be behind them. So it's more. I think it's more a reaction there. But we don't own any. I think Adani Ports is something we have interest, and we genuinely believe that logistics is something with our cost of logistics as a percentage of GDP keeps coming down. What they have created is something is very difficult to replicate. and they will have a very, very large market share, will continue to add market share there. So that's something we like. And maybe at some point of time, if valuations is to our liking, maybe we will get into it.
You know, Gurmeet, I want to ask you about chemicals, right? We spoke with one of the largest and the oldest players in that space, which is Realty, and just want to play out that soundbite. Basically, they told us that about 40% of the revenues is U.S. exports, and within that, there will be a meaningful benefit. The numbers, let's hear it from Realty management themselves.
It's a great positive for the sector in general and also for Realty Industries. For a country, roughly US accounts for 20% of our chemical exports globally, and in that context, $6 billion worth of chemicals get exported to US from India every year. So in that context, this reduction from 50+% to 18% will help tremendously. Even for Realty, as part of our total revenue, 17 to 18% comes from US. So it's also a sort of huge positive for us at Realty Industries. But I think more importantly, the certainty will help sort of decongest a lot of decision making that has got hampered in the last 9 months from investments point of view, from future growth opportunities point of view. So overall, a very welcome move and a huge positive for the sector and for the company.
Meaningful positive, Gurmeet, for a company like Realty Industries. Do you have a view post the change, post the India-US trade deal, or any chemical company that you like?
So one, as I said, we have JG Chemicals in our portfolio, which is into zinc dioxide, with end use 80% is tire. We have Navin Fluorine in some of our non-discretionary portfolios. So that's done well, actually. That's done well despite the headwinds. We are looking at even agrochemical space. So maybe PI Industries is one of our old holdings. Maybe if we want to add, over a period of time, we will. But as I said, I'm favorably looking at it, even Deepak Nitrite. So these are some of the names which we are evaluating, and I think that it's also at a cyclical low. And a lot of the capex actually has happened over the last 2-3 years. So that might start coming into play as things normalize.
Okay. Thanks very much, Gurmeet, for joining us. Good speaking with you. Appreciate your time here on CNBC TV 18. 670 points, 25,761, and I think it's about 40-odd minutes to go for market close. We'll take a quick commercial break here. Our Alpha Manager, Sanjay Parekh of Soham Asset Managers, on the other side. Stay tuned.
Welcome back. It's a very green-looking screen, but let's find out who the outliers are in terms of more price action, more gains, more volumes. Hormus is here to put the spotlight on those stocks that are running against the trend today.
Green-looking screen, but there are pockets of red as well in today's session, although they may just be 250, 260, but there are significant names in this list. PB Fintech is one of them. It's the third straight day of losses. Of course, the stock reacting to the CNBC-TV18 news break, which got confirmed last evening. More news breaks coming on this front as well ahead of the board meeting later in the week. The stock is down 11% now in the last 3 sessions from when it has been selling off. And today's volumes are the highest since June of 2024. So it's almost at 18-month high on the volumes, and today's session we've seen over 1 crore shares that have been traded on PB Fintech compared to a 20-day average of just around 11 lakh shares. And in light of this, the stock is now below its key moving averages. It has remained so over the last couple of months now, and because of today's fall and over the last 3 sessions, of course, PB Fintech's market cap has slipped below the mark of 70,000 crore. The other one is an earnings reaction. Varun Beverages numbers came out just a few minutes earlier. The third straight day of losses here as well, reacting to its fourth quarter results. And the last 10 out of the 12 trading sessions, the stock has ended lower. It's been underperforming over the last couple of weeks now. Today's volumes are the highest in nearly 4 months, with over 2.5 crore shares that have been traded compared to a 20-day average, which is just around 40 lakh shares. And this too has slipped below its key moving averages, down around 24% from its 52-week high of close to 600 rupees. And lastly, Intellect Design, the stock continuing to sell off from last week. The third straight day of losses here as well, down 12% now in the last 3 sessions. The volumes over the last 3 sessions that you have seen are the highest since November. And today's session too, you've seen 13 lakh shares that have been traded, the 20-day average of just around 3 lakh shares. This stock is also below all of its key moving averages and has further slipped below its 52-week high, taking that fall from those levels down to over 35% now.
All right, Hormus, thanks very much for that. Sanjay Parekh is with us. He's founder and CIO at Soham Asset Managers. Sanjay, good afternoon. Good to have you here. And it's a good day to be speaking to you. It's always good to speak to you, but exceptionally good today with the market doing what it is. How's the portfolio doing across, Sanjay? And any fresh ideas come to mind? How to approach things with this big change which has taken place from last night?
Yeah, I mean, good afternoon, Krishan. So, I mean, luckily our portfolio was positioned quite well. Of course, we don't have a direct play for opening up, but we did. I mean, there's a very strong hope that this should get through. Maybe it was taking time, and then economy also is recovering. That is more important. So post-budget, we realized that, of course, this future-led issues will be a dampener, but in few days, and that time we didn't know that, this trade deal will happen so fast. But one thing we were very positive that the economy is actually recovering. And, this has been like 17, 18 months where we were wanting to happen. But now when you see on the ground cement demand, cement prices going up, steel demand, power demand, the one-day ahead market in power, JSW Energy told us is up 35%, a month in 20 days. So that credit growth at this inflation level, inventory levels, CV demand. So it is clearly showing that economy is recovering, and that was more enthusiastic for us, So that's where our cash levels are low, and luckily market portfolio has done well because ours is a cyclical portfolio, and it's helped us.
Okay, hi Sanjay, good to see you, Ben. And as you're saying, the economy is seeing a bit of a recovery. So I had a couple of questions then. The capex spend is as good as expected. The economy is seeing some kind of recovery as well. I wanted your view on some of these infra-related names. And the reason I ask is their order book is good. Some of the execution is quite good as well. But looking at the stock prices, it appears that they've gone through a corporate action, which is not the case. Some of the stocks are down 30, 40, 50%, and some are half from the top. I was looking at your portfolio, you'll have stocks like Dilip Bilcon and the likes. Do you think this is the space that's actually one of those ignored sectors? And if the economy is going to go up, the capex spend is going to spike up, then maybe they're providing an entry opportunity?
Yeah, Nigel. So you have a valid point. Some of these stocks, they have moved down dramatically. And in our case, luckily our entry point was better. So it's still 5-7% lower, and of course you lost a whole year. But there's clear deep value that we see in some of them. But markets apprehension has been, and some of it is valid, that the working capital situation at times, the working capital cycle, some of the states not doing the heavy lifting of not paying on time. All these are very, very valid concerns. So the problem is not order book. The problem is getting the money back on time. And that is always been a worry with this sector, and hence they've been significantly derated. I mean, the one we are holding, in fact, the standalone business coming free to us. If I take the coal MDO value and the InvIT value, the standalone business with 900 crore EBITDA is free, and now the order inflows have started to come in. But I think the working capital situation for all of these have to get better. And for that, the support of the states in certain cases, center also, but center has been normally good in pay, is important. So I think that's where, as it gets better, I think it will be slow re-rating upwards for them.
Sanjay, did you have a word with at the dealing rooms with any of your friends in the brokerages? Have FIs been buying today? Will they come back in a meaningful way?
No, I mean, you're not so networked, but I'll tell you broadly, I'm very, very hopeful that, and I've been into Prudential earlier meetings globally when I was in ICICI Mutual Fund. So, India as a country is just one stock, where if the ROEs are higher, growth is higher, and what is the price earning or price to book. So it was not in place in the last, if you take in hindsight, growth was not coming back, price earning were higher or price to book were higher, and that adjustment was happening. Now I think, and that's why we are preempting at least that if earnings growth comes back, and if it is not one-off and it is clear U-shape, but it does sustain, then the earnings growth, and I'm saying economic growth comes back, and then the earnings growth has to follow, and the earnings upgrade cycle can come. And then world over, that's been tracked very heavy. And that's where they start buying. And valuations also now, we have very good time correction, almost 17, 18 months. So valuations are also now reasonable, at least in the large cap. So I think we need to preempt a bit, and hopefully, currency also will help with this trade deal, and FDIs will come in. The pressure on rupee or RBI to support rupee will be easing off, and that will certainly help FIs to further increase their allocation at a point of time.
Sanjay, what about the metals pack? How far are we from the peak? You have timed that very well. You've been patient as well on bad days. Will you take some money off the table, or are you looking to ride it for a longer run?
So we just saw, as you know, we own Vedanta.
Vedanta and JSP and Jindal Steel, I think so.
JSP, recent entry, we bought it around 2020-30. So all throughout our down fellas, we were very, very positive. But after we bought JSPL the day they got the duties, the protection. Because then we said now, certainly these companies will get pricing power. Obviously there's some price increase. And, JSPL was very reasonable. Even if we give 7 times EV EBITDA, we were getting a good upside from an entry point, and that's why we bought small way. So I think that cycle, for us, we still have to always be aware of, we have protection now. That is now not a worry, but if we did not have it, we would not have bought it. Non-ferrous, I think the SOTP of Vedanta, once the demerger happens, I still feel there could be a good unlocking. You've seen that earlier in Tata Motors, even earlier you would have seen in Raymond's, the combined piece was 1800. The one which got split, it got listed at 1800. Recently you saw Tata Motor PV and CV. So I'm very, very hopeful that, assuming reasonable assumptions, more like $60 or silver, $60 an ounce of silver, more around 3,000 for zinc, and around 2,800-2,900 for aluminum. Even with that, there's a good upside. And when the companies become very focused, there clearly can be re-rating. So we are still holding on, and we will continue to hold on.
Yeah. Sanjay, just I was looking at your portfolio. Do you still own Indus Tower, or you sold out?
No, this was again we sold off because we are making good money. And we realized actually all throughout Indus Towers, Vodafone was one issue. So, whenever Vodafone-led panic was there in Indus, we used to buy. And in fact, this is the third time in 3.5 years that we bought at around 328, 330. And then around a little lower than the current levels, we reduced. So we love the business. It's just that now Vodafone risk is significantly less, but the growth trajectory of growth is still slow.
Yeah.
So be it the Africa expansion, the tower expansion, then the Geo reprice. Whenever Geo comes for renewal, they may not renew with Indus Tower.
Yeah.
So with that, we were a little, we thought we'd take money at the table and we booked profits.
May make sense again at 320, 330, right? If it comes to that. But as you said, you've done this. I mean, you bought it lower and sold higher a few times now in the last couple of years. But good speaking with you. Good chat as always, Sanjay. Really appreciate it. Thank you for joining us here on CNBC-TV18. We'll take a quick commercial break here.
We'll just do a quick check, actually.
Futures and options, Nigel.
Futures and options space. Let's do a quick check out there. There's definitely a short covering bounce that's taken place. Take a look at the screen. I'll pull up the futures plate, actually. On the Nifty, there appears there is some shedding of open interest with the Nifty up close around 600 points. So there's about a short covering taking place out there. But the bigger short covering actually is taking place on the Nifty bank. Because out there, the open interest is down by close around 10%. So massive short covering bounce is what we're seeing. Now, keep in mind, the India VIX had a bit of a journey towards that 16.5 odd. That's cooled off yet again. That's telling you that you're not seeing any big risk. And on a day like this, they move inversely. Markets move up, India VIX moves down, and that's precisely what's happened. The PCR, that had moved to around 0.62, 0.65. Couple of trading sessions back as well. On budget, it went to 0.6, 0.59 as well. And we had said it's stretched on the downside. Currently, it's at around 0.9. Remember, all this will change because in the next few minutes, we'll have the contract that will expire. 25,800 call, there's a mix of activity out there, so you've got the direction correct. But, since the time value of money is eating into that one, the premium, I think, is more or less flattish at around 15. Let's get that strike up for our viewers, 25,800. And the 25,700 put, well, the premium has eroded big time. So those writers, they're having a blast in today's trading session. What are the levels you're looking at? Well, the 50 as well as the 100 DMA, that's important. The next level of resistance really will come at the highs of today and around 25,830 or thereabouts. 50 and 100 DMA, the nearest reference point. ITC, after a while, we're seeing actually some fresh buying out there. The stock is holding strong at around 310, 308, 315. We're seeing a lot of long additions. So I'll keep an eye out on that stock. PFC as well is seeing a good amount of long addition out there. Fresh buying is what we see on that counter. And Divi's Laboratory, silently, that's actually gone in for a short covering bounce. Stock is up close to 4%. Open interest is down big time out there. So that's clearly seeing a bit of a bounce. And finally, in a strong market, you have Godrej Consumer that's actually relatively underperforming. So fresh shorts being seen on that counter. Net, there's a bout of short covering that's taking place. The cash market flows will be important. But I think given that it was expiry, those call writers, they got stuck on the wrong side with the markets up more than 600 points. We'll slip into a short break, but on the other side, we'll tell you some technical ideas, buying and selling trades. And also Nimish will be waiting in to tell us what is he picking up in D-Street Chatter. Welcome back. Well, the market's still holding in the green, so that's good. Now, today the event is mostly playing out and bulk of the good news is going to be digested, but it's going to be about earnings, earnings, and earnings from here on. And Vivek joins us to give us a wrap about some companies that have actually delivered the numbers today. Vivek, take it away.
Well, that's right. Between last evening as well as today, quite a few earnings, have slipped our attention. But sharp reactions is what most of them are seeing. First on the list, a couple of hours ago, Warren Beverages came out with a set of numbers. Post the earnings, you saw a very sharp spike, post which it has cooled off considerably. In terms of the numbers themselves, on a year-on-year basis, revenues higher by 14%, EBITDA higher by 10.5%, margins at 15.7%, and profitability jumping by 33%. However, the management commentary has mentioned that this particular quarter was impacted by unseasonal rains, and especially when you're talking about the domestic volume growth, quite healthy at 10.5%. But despite that, margins have been something that's a bit of a dampener. It'll be important to see the kind of guidance that the management will give in the conference call, but the stock has in a sharp fall. Ather Energy, very sharp up move that was seen in the stock today. Healthy set of numbers as far as Q3 is concerned. A major significant margin improvement, almost 1,600 basis points improvement on a year-on-year basis. Total income is up 53%, and the management said that they saw continued market share gain as well as volume increase on the back of, and a very healthy commentary coming in from the management as well today when they joined us. Interaj, again, a mid-cap company, but very sharp up move that is seen in the stock today. Revenues have almost 43% on a year-on-year basis on account of an expanded capacity base. EBITDA high by 44%, margin steady at 9.5%, and profitability up at 32%. Order book quite healthy at over 1,650 crore. City Union Bank, clearly an outlier, very strong set of numbers as far as the smaller private banking names are concerned. Net interest income up almost 28%. The pre-provisioning operating profits up almost 17.5%. Profitability high by 16%. And the management got the confidence to go ahead and up the loan growth guidance from low to mid-teens to now mid to high teens. So that particular stock doing quite well. On the other hand, Utkarsh Small Finance Bank, multiple consecutive quarters of loss that this particular company has seen on a sequential basis. Losses have widened and credit cost elevated quite significantly, almost 10 to 15 basis points in this particular quarter. That stock seeing quite a bit of a decline today.
Very helpful summary, Vivek. Thank you very much for joining in. But just turning our attention to gold and silver prices because they've rebounded after the massive fall over the last week. Manisha joins in with the details.
Well, thank you so much for that. Yes, 2 days have been a massive decline that we've seen in gold and silver, both of those commodities. The sell-off came in because of the margin hikes, the speculative unwinding, and also because of the easing geopolitics. So whether it has been about US and Iran or even US and India trade tariffs for that matter have led to some ease in the international markets therein. But when you look at the markets today, well, gold is trading 5% on the higher side. Silver is trading 10% on the higher side. It continues to be very, very volatile. So even as we are back at around $4,900 an ounce for gold, markets do believe that some profit taking is still remaining, and $4,400 to $4,500 an ounce is a very strong support on the lower side. For silver as well, while we have been looking at that $70 to $85 an ounce of a range in last 24 hours, a lot of experts tell me that $65 an ounce perhaps is a level that silver prices can go up to on the lower side. So volatility in the near term is something that is not ruled out. As of now, we've seen a bounce because the structural strong support numbers have kind of held on. And then there is no changes really in the long-term fundamentals. If you look at the year-end targets for gold and silver from most banks and brokerages, they believe that even higher highs is where you could be looking at by the time this year ends. The other reason that the buying has come back into the market is because the narrative about this partial US government shutdown is still on, and is the reason you wouldn't be looking at labor data. The US non-farm payroll data will also not come into this week. So some of these concerns are yet again supporting gold and silver prices. And then, of course, the kind of sell-off that we saw in the last 2 days, this is a bit of a bounce back that we're looking at in the day.
Okay, all right. Thanks a lot for that, Manisha. Well, let's hop across to Mitesh. He's here to give us a couple of trading ideas. Mitesh, what do you have on your radar?
So I think, after the opening, Nigel, we did have some kind of a decline. But since the afternoon time, we have held on well. So I'll go with some long calls, hoping that the momentum will spill over in the next couple of days. So DMart is a VTST with a stop at 37.59. Look for targets of around 3,800. And Apollo Hospital after correction is trying to reverse. So that's the BTST with the stop at 70.75 for targets of 71.20.
Okay, all right, Mitesh, thanks very much for that. So those are individual trades. Markets, of course, holding rupees at the day's highest point. 90.22. Well, it's a CNBC-TV18 news break confirmed. We reported that Advent International is set to pump in 2750 crores odd into Aditya Birla Housing. That's essentially the fully owned subsidiary of Aditya Birla Capital, which is a listed entity. Rachna broke that story and now she has got more details. Rachna, congratulations and take us through the transaction.
Right, it is a CNBC-TV18 news break confirmed, and with this deal, Advent will hold about 14% in AB Housing Finance by investing about 2,750 crore rupees. Now, what's important here to understand is that this deal marks one of the largest capital infusions in India's housing finance sector in recent years. The investment will be made through Indria Limited, which is an Advent entity, and the deal is structured as a primary capital infusion. Completion of the deal is, of course, subject to shareholder approval, regulatory clearances, and other customary conditions. Now, why this deal matters? The 2,750 crore rupee check significantly strengthens Aditya Birla Housing Finance's capital adequacy and balance sheet, providing firepower to scale its loan book at a time when housing financiers are preparing for the next phase of credit growth. Now, the capital is expected to support expansion in affordable and mid-income housing segments. These are the segments that continue to see resilient demand driven by urbanization, infrastructure-led development, and policy support. Now, housing finance companies are also under increasing focus from regulators and rating agencies to maintain stronger capital buffers and diversify liabilities. In this scenario, a large long-term private equity infusion not only supports growth, but also enhances confidence amongst debt investors and bond markets. So the deal comes amid a broader revival of investor interest in India's housing finance space over the past 12 to 24 months. We've seen the likes of Shriram Housing Finance's deal with Warburg Pincus or Aavas and CVC. So a lot of private equity action in the sector. So against this backdrop, Advent's 2,750 crore rupee investment stands out as one of the biggest primary equity infusions into a housing finance company, second only to outright acquisition deals like the Shriram Housing Finance one that I mentioned. Now, this transaction also marks Advent's second stint with the Aditya Birla Group. The global PE firm was previously an investor at the parent level, that was in the Aditya Birla Capital, and has since monetized parts of that exposure. Its return this time at the subsidiary level signals definitely a renewed conviction in the housing finance business specifically, rather than a broad holding company bet that we've seen. So we will keep an eye out for more.
Okay, well, lots of transactions there, and we'll get you more over the next many days and weeks. Rachna, thank you very much for that. I think markets, of course, holding on 645 odd points in the green, and you know, some of the stuff which, of course, started one way is continuing to look at lots of these, you know, specifically affected in a positive way companies, right? In the textile, the shrimp, Avanti feed, and so on and so forth, all have not opened up from their respective circuits. Jay Bala is with us with what he'd want you to do as we look ahead. Jay, what's the sense? I mean, 7:30. You know, right after the budget on Sunday when we were trading, it looked like perhaps there was that a touch of the August low, 24, was it 330, 340, right? Perhaps coming, but dramatic swing since then.
Hi, Prashant. It's not a surprise for us. We've been pointing out for the last 6 weeks here on CNBC-TV18, the markets are likely to hit to the August low of 24,400 and then recover from there for a resurgence to 29,000 on the Nifty. So the market's gap up today is not a surprise at all from Elliott wave perspective. But the low of 24,713, 24,571, which is very close to 24,400, might have got a truncated move. So I think the next leg of the move for 28,000 might have already begun. I just want to, I don't come to a conclusion on emotional markets, and such huge gap ups are classic emotional markets. I'll allow for the markets to settle down for one more day and let the follow through come through. But in all probability, the markets have started its move to 29,000. I'm just a little bit, want to see the markets have a follow through. So it's quite bullish from here.
Quite bullish from here. All right, Jay, but earlier I think you were thinking that we'll dip and then we'll move up. 24,000 and then the journey comes up. It seems we've skipped that step. You're ruling out that we go ahead and visit the recent low, or do you think now let's get fasten our seatbelts and get ready for a ride in the northward direction?
That's right, Nigel. You should always be flexible about your views on the markets. As far as technicians are concerned, market is the god, and whatever it says, you just nod to it. And the low that it registered on the budget day, the spike low, which is very close to the 24,400 low, has a very good chance of being a significant low that doesn't get visited for the next 6 to 12 months. So watch out for it. So we are looking for, like I said earlier, I want the market to stabilize for a day or two, and then we can, thump our desk and say, yes, that's the bottom. But, in all likelihood, the pointers are towards the possibility that the markets have already bottomed and fresh record highs are coming. And, Stranger Things is no longer going to be things that you're going to see on Netflix or Amazon Prime. It's probably coming to the market. You're going to have disparate moves in the markets, and yet markets, misbehave for a lot of people. So, but it's all bullish from here on. I reiterate the bullish stand.
So you said straight to 29,000 without too much hesitation and pullbacks, etc., or it's a long drawn journey?
There'll be pullbacks, Prashant, but it'll be a sequence of higher highs and higher lows. But the budget low, that we saw on Sunday, there's a reasonable probability that it's going to hold. I'm reiterating the same point. I just want the market stabilized and have a follow through in the next couple of sessions.
So so you go long Nifty and trail Nifty stops here, or is it better to do through stocks?
Yeah, it can get to the stock level, the micro level, but you have to be cautious on, or at least in my opinion, I'll be cautious on two sectors. One is the metal space, another one is the FMCG space. FMCG have not been bullish since the September 2024 peak, and but there could be pockets where there could be outperformance. Metals, they've been the first to clock fresh record highs, and they could see considerable amount of pullback. I'm seeing a significant reversal possibility for copper on COMEX, and even gold and silver. They might have peaked for the medium term. You could see increased sharp levels of decline, but the long term is still bullish. But in the short to medium term, you're going to see very likely to see very sharp pullback for gold and silver and platinum.
Do you have a level on gold and silver? Because in the past, when there has been a drawdown, we've seen falls of 30, 40, 50%. What could be the extent if there is a correction in gold and silver?
See, what you saw on last Friday, Rima, it's just the beginning. And we could see something like 3,400 to 3,100 on COMEX gold, and something like 62 to 58 on COMEX silver. So like I pointed out last time, on trading it requires a considerable amount of knack and considerable amount of skill. So it's not for everybody. But my opinion is that silver is going to see a bounce somewhere close to 91 to 93, and then resume the decline it saw on Friday. Same thing for gold. Gold probably going to go somewhere closer to 5,100, and then resume the decline that it saw on Friday.
Okay, Jay, stay on. We'll slip into a break. Before that, here is what market veterans have to say on the deal announcement impact on the market. Sunil Singhania, Neelkant Mishra.
I think the markets was lacking a catalyst, and this certainly comes as a catalyst. In fact, I jokingly say that people had just stopped even talking about stocks. It was all about gold, silver, and I have never seen phones not ringing after a budget the way this time it was quiet, because no one was just interested in knowing what to buy. So I think this comes as a very, very pleasant surprise. It helps I would say the mood, which was the most important. It definitely helps the economy, the corporate profit growth, and hopefully the currency should also respond. So I think all in all, the positioning is light. FIs have been short, as been seen by the futures, open interest. Position on the domestic side, at least on the speculative side, is low. And expectations after the budget fall were also very, very low. So this definitely comes as a big, big catalyst.
As you know, there are many sectors which are exempt from IEEPA tariffs, electronics, pharma, petrochemicals, etc. So those have been growing very well anyway without this deal. The commodity exports, like say shrimp, there was trade diversion, meaning that if the US market was shut, they started selling to China and Japan and Europe. There were sectors where I think there was some transshipment also starting to happen. And by and large, the tech side FDI had also been happening. So even before the new ambassador announced that India was going to be part of Pax Silica, the investments from the US hardware tech names from India were actually quite robust. But that does not mean that the deal has no value. There were sectors like gems and jewelry, apparel, auto components, where there was very visible impact of the 50% tariffs.
Okay, just 2 minutes to go before we wrap the trade. Still in conversation with Jay. Jay, any more trading ideas that we can take just for the near term?
Yeah, I don't have anything for the near term. I have something for the slightly longer term. The one is Realty Industries, and it's made an important low at 330 odds. And today's move is a reiteration of the fact that it's heading to huge levels from here. I'm anticipating it to be a 2.5, 3 bagger from current levels. The stop loss is 360. And we had a call on Bharat Forge in September, October. So I'm reiterating a call on that. It's heading for fresh record highs past 1800.
Okay, all right, Jay, thanks a lot for joining in and giving us all of those details. But let's wind down trade, and what a terrific Tuesday it's been for the markets. The total market capitalization that the BSE listed companies have put on today, I've not got this number wrong, it's 12.5 lakh crores in a single trading session. We had bombastic gains actually. If you pull up the Nifty, look at that, 2.5%. When is the last time we've seen the markets move to that sort of a level?